Things are getting intense in the Eastern Democratic Republic of Congo. Hello and welcome to the Northern Miner Podcast. My name is Adrian Pocobelli. There have been some developments here. Of course, we've been following this story for pretty close to a year now. The conflict minerals, as they're called, located in the Eastern Democratic Republic of Congo. Bringing you up to date in a couple of sentences here, the M23 rebels, who are thought to be supported by neighboring Rwanda, continue to make striking victory after striking victory. Not sure if they have drones, where the weapons are coming from, but the DRC's army continues to lose against these M23 rebels, again thought to be supported by Rwanda. So here is the latest on the situation, and a ton to get through today. So I am jumping right into it. Here is Bloomberg News. Rwanda-backed rebels claim control of strategic Congolese city. Congo government army have not confirmed fall of Goma. UN and US say M23 rebels are supported by neighboring Rwanda. So things are heating up. In other words, what was perhaps what we could call a low-intensity conflict could turn into a full-blown war, as it says here. Michael J. Kavanagh with Bloomberg News. A rebel group aligned with Rwanda says it seized a key trading hub in Eastern Democratic Republic of Congo, raising the prospect of a full-blown war between the two Central African nations. The M23 rebel group said all Congolese military personnel must hand over their weapons to UN peacekeepers and assemble at Goma's main stadium. That doesn't sound like a fun idea, does it? Congo's government and army have not confirmed the city has fallen. So, rebel groups overtaking DRC government forces. And here's a quote from the M23. Quote, "We urge all residents of Goma to remain calm," end quote, the M23 said in a statement posted on X. Quote, "The liberation of the city has been successfully carried out," end quote. A city of 2 million people that lies on the border with Rwanda, Goma is at the center of trade routes for natural resources including tantalum and tin ore, minerals used in electronics such as mobile phones. And of course, these are the famous 3T minerals, the third mineral being tungsten. The US, Congo, and United Nations experts accuse M23, which already controls the region's biggest tantalum ore mine, of smuggling minerals to Rwanda. Spokespeople for Congo's government, army, and the office of President Felix Tshisekedi didn't respond to multiple calls and messages requesting comment, nor did a spokesperson for Rwanda's government. And then there's a photo of UN peacekeepers in Goma. Interestingly, the blue helmets. Haven't really seen those in the news for a while. It continues, M23 broke away from Congo's army more than a decade ago and is one of the more than 120 rebel groups fighting in the region. Conflict between the two sides has intensified in recent months, causing the displacement of hundreds of thousands of people, exacerbating an already dire humanitarian crisis. Congo, the US, and UN officials say M23 is backed by thousands of soldiers from neighboring Rwanda, which Rwandan President Paul Kagame denies. And you see on the map, Goma is straddling the border between DRC and Rwanda. Interestingly, the article goes into the Apple situation, which we've also been following. Last month, Congo sued Apple in Belgium and France for allegedly buying minerals from Rwanda that had been pillaged from Congo. Apple disputed the charges and said it's asked its suppliers to stop sourcing minerals from the area. Congolese Foreign Minister Thérèse Kayakwamba Wagner told the UN Security Council in an emergency meeting on Sunday that Rwandan troops were crossing the border near Goma, and her country considered Kigali's support for the M23 advance a, quote, declaration of war, end quote. Wagner asks that the Security Council demand the withdrawal of Rwandan troops from Congo, outlaw weapon sales to the country, and sanction Rwandan politicians and army officials. She also asked the Council to call for an embargo on the purchase of all minerals sold by Rwanda, particularly gold and coltan, a source of tantalum. And let's not forget, as I always like to remind us here, that about a year ago, we were already seeing this conflict, and the EU put out this MOU, Memorandum of Understanding, with Rwanda to make a trade deal for minerals. Just something to remember here within the context of this story. Rwandan ambassador to the UN, Ernest Rwamuikyo, told the council that Congo's inability to govern itself or control the many armed groups active in its eastern region was the root of its problems. Now, just on that front, remember there was the peace deal that was brokered by Angola around the time that Biden was visiting? And then Rwanda said that they were definitely not supporters of the M23. But as I said at the time, it seemed to me that was going to be a really defining situation, because it seems to me that if M23 is an independent rebel group, and for all we know they are at this point, let's not forget Machiavelli, you can invite mercenaries in to help you, but they may turn on you. Or you can invite a foreign power to help you with a war, but they may turn on you. So we actually don't know, I would argue, if the M23 are independent or backed by Rwanda. It seems as if they are, right? And after that peace deal, it seems to me that Rwanda would have a motive for the M23 to be suppressed, because if they are independent, one would imagine they present a threat also to Rwanda, particularly because they're on the border of Rwanda. So one would think they would have an interest in dealing with the M23, right? So let's just continue the last couple of lines of this article. The M23 last captured Goma in 2012, which resulted in widespread condemnation and sanctions by the international community. So interesting. So this is a contested city. The M23 had it in 2012. The rebels say they're fighting for the rights of ethnic Tutsis and other speakers of the Rwandan language in Congo. I'm not sure I believe any of that, to be frank. I mean, that may be part of it, but it seems to me this is about the minerals. This is about wealth. This is about pillaging. Let's continue. We have another story here. This is also Bloomberg News via mining.com. Tin miner Alphamin slumps after rebels take Congolese city. This is dated January 27th, so on Monday. As it says here, Alphamin Resources shares fell the most in 9 years after Rwanda-backed rebels overran the eastern Congolese city of Goma, the capital of North Kivu province where the company's tin mines are located. And again, one of the 3T minerals. After a rapid advance, so-called M23 rebels are now patrolling Goma, a trading hub for Democratic Republic of Congo's mineral exports to neighboring Rwanda. It's not, however, a transit point for Alphamin's tin, which comes from mines about 120 miles west of the city and is sent northeast to Uganda. Chief Executive Officer Marit Smith declined to comment when emailed Monday. So the pretext of the M23 is Rwandan language, ethnic rights. But we see here in this other article, Goma is a trading hub for the Democratic Republic of Congo's mineral exports to neighboring Rwanda. Sounds pretty strategic from a natural resources wealth point of view, doesn't it? Couple of more updates on this, since this is a little bit of a breaking story here. It looks like this is turning into a war. Now, in a sense, if you look at it from the Democratic Republic of Congo's point of view, they keep losing battle after battle here, is the reality that they're facing. Their government forces continue to be defeated. Frankly, not unlike what we're seeing in Myanmar, interestingly. And it's probably newer weapons. One suspects they have drones. Where they come from, who knows? But one suspects they have drones. So it seems to be a lopsided battle. So all to say, the Democratic Republic of Congo may want to declare war because they're mad, but they may not want to declare war because they might feel like they might have a lot more to lose if they are not as well armed. Hence, one could argue the emergency United Nations Security Council meeting, because they need help. Is what it looks like to me. These M23 seem to be really well armed. And again, is it drones? I mean, that's what we were starting to hear about in Myanmar. And, a thorny question is, where are these drones coming from? A couple more headlines here. This is BBC News. All we can hear are gunshots. Democratic Republic of Congo fighting as it happened. And they have a live reporting area of their website, which just emphasizes the urgent nature, really, of this situation. So as it says here, the situation in Goma, very fluid, UN officials say. Fighting across Goma, quote, is still very much ongoing, end quote, senior UN official Bruno Lamarquis has said. Reuters news agency reports after M23 claimed they had seized the largest city in Eastern Democratic Republic of Congo. Lamarquis said the situation was, quote, very, very fluid, and it's not over yet, end quote. And just a couple of headlines in these live reports. Doctors told to hide under hospital beds in Goma. Video footage of people fleeing Goma. Video footage shows escaped prisoners on streets of Goma. Wow. So things are intense there. Finally, on this story, this is The Guardian. France seeks UN resolution naming Rwanda as backer of M23 rebels in DRC. M23's lightning advance into East DRC being supported by up to 4,000 Rwandan troops, say UN officials. Now, if we zoom out and look at the geopolitics of this, it seems to me that China wouldn't want this to be happening. They have huge copper and cobalt interests in the DRC. So it doesn't seem to me that, China and by extension Russia would be wanting to supply Rwanda or the M23 with these weapons. So it kind of leaves an open question, like, how is this all happening? Let's see what France has to say. So turning to The Guardian, France is seeking Western support for a UN Security Council resolution that names Rwanda as being behind the M23 rebel group attacks inside the Democratic Republic of Congo, including the surprise weekend seizure of parts of Goma, the largest city in eastern DRC. UN officials said as many as 4,000 Rwandan troops were escorting the M23 rebels. The UN Secretary General Antonio Guterres on Sunday called on the, quote, Rwandan Defense Forces to stop supporting the M23 and to withdraw from the territory of the DRC, end quote. It was his clearest statement of Rwandan responsibility for much of the violence. But practical steps to isolate the Rwandan President Paul Kagame are not yet being openly canvassed. Similar sanctions in the past, notably in 2012, forced Rwanda to pull back when aid was slashed. The French ambassador at the UN, Nicolas de Rivière, urged the UN Security Council to say Rwanda's actions were a grave threat to regional peace and security. He said, quote, it was time to call a cat, end quote, a reference to the way in which the international community, for different reasons, had skirted around the issue of Rwanda's role in arming the M23. Britain and the US in their interventions at the UN on Sunday also named Rwanda and urged Kagame to pull back. Britain, France, and the US have all been reluctant to impose sanctions on Kagame. And one wonders if it's because of all the minerals that are coming out of Rwanda. Who knows what the reason is? The UK became dependent on Rwandan goodwill when it signed an agreement for Rwanda to accept asylum seekers, but the scheme collapsed in the face of legal and political objections. France has been grateful to Rwanda for policing the Central African Republic and Mali, both former French colonies. The EU in 2023 signed a mineral pact with Rwanda. The US has rarely seen Africa as a diplomatic priority, and one of the first steps of its new president, Donald Trump, was to freeze all aid to the continent. Scrolling down a bit, some nations, notably Russia and China, as well as the African nations holding rotating seats on the Security Council, are content to issue generalized calls for restraint. Russia says the dispute is rooted in colonialism, a comprehensive critique it provides to analyze most Western actions in Africa. In speaking to the Security Council, the DRC Foreign Minister Thérèse Kayakwamba-Wagner rejected any history lessons, instead favoring the UN imposing sweeping economic and political sanctions on Kagame, including on all Rwandan-labeled minerals. She accused Rwanda of, quote, a declaration of war and no longer hiding behind diplomatic maneuvers, end quote, adding that it was, quote, clear that this crisis is directly linked to the economic plunder of our country by Rwanda, end quote. So things heating up in the eastern DRC. They were already hot, and now it is getting a lot hotter. Moving over to Myanmar briefly. Last we heard, China had brokered a peace between the rebels and the military junta in Myanmar, which of course supplies a huge amount of rare earth minerals to China to be processed. That's the last we heard, but then as of this morning, Kia allies seize airport armored unit from Myanmar junta in Bammo. So it doesn't look like much of a peace is going on there. The Kachin Independence Army, or Kia, and allied resistance forces seized the airport and the base of a junta armored battalion in Bammo over the weekend, while also surrounding the headquarters of an artillery battalion. Amid escalating clashes in the township, Kia spokesman Colonel Na Bu told the Irrawaddy, quote, along with 7 armored vehicles, we seized the junta's armored battalion 7006 base at around 3:45 on Saturday. Also on Sunday, Kia and allied forces seized Bammo Airport, end quote. So one thing we can see here is these brokered peace agreements are just not holding. It was in December that we had the Angola and, frankly, U.S.-backed agreement between DRC and Rwanda, and that broke down. And here, I feel like it's a week after the headline, maybe 2 weeks after the headline that we saw that China had brokered a kind of peace agreement between the rebels and the military junta. Then we get a headline like this. These peace agreements are simply not holding right now. A few more headlines here. Greenland mining minister warns of devastating Trump effect. This is the Financial Times. And so they're concerned about all of Trump's talk about Greenland is going to scare away investors. And this is what Greenland's mining minister, Naya Nathanielsen, told the Financial Times, quote, "When he, President Trump, talked about not excluding military use in Greenland, I was quite worried about how investors would perceive Greenland, maybe as a democracy about to be unstable or overrun. That would be devastating for our mineral sector because investors do not like instability." And another quote, "Companies are looking for a reason not to do an investment. This can be in the category of political instability." And a final quote here from the mining minister, "If you cut through the rhetoric, what I hear Trump saying is he thinks the natural resources in Greenland should be put to use. And we totally agree with him on this." End quote. So Greenland worried about investment in the country with all of the discussion of a U.S. takeover. Continuing on finally just with Korea Zinc, with this boardroom feud, as the New York Times is calling it here, for control over the world's biggest zinc smelter, which again wants to provide antimony to the United States, which of course China has recently banned the export of. So a crucial strategic smelter here, as I've discussed in the past. So New York Times doing a write-up on it. Bitter boardroom feud for Korea Zinc takes a dramatic turn. An eventful shareholder meeting provided the latest twist in the dispute between the families whose deceased patriarchs founded the company 50 years ago. And here's the story by Daisuke Wakabayashi at the New York Times. For months, the fight for management control of Korea Zinc, a leading metals producer, between its two founding families seemed headed for a dramatic showdown at a shareholder meeting. But instead of a conclusion, the meeting on Thursday launched what could be a prolonged legal battle after a last-minute stock maneuver by Korea Zinc's chairman, Yoon-bi Choi. Mr. Choi and his family took steps on Wednesday, so the day before the meeting, to invalidate votes held by Korea Zinc's largest shareholder, the conglomerate Youngpoong, which was seeking to oust him from running the company. It was the latest twist in the bitter months-long dispute between the Choi and Chang families, whose deceased patriarchs founded Korea Zinc 50 years ago. The Chois currently manage Korea Zinc day-to-day, and the Changs control Youngpoong. The feud has become a test of resilience of South Korea's powerful family-run conglomerates known as chaebols in the face of Western-style corporate governments. It has added the element of deep-pocketed private equity firm Seoul-based MBK partners looking to profit from upending the status quo in South Korea. And Korea Zinc carries a great deal of geopolitical significance as one of the few major suppliers of metals critical to global supply chains without ties to China. And then scrolling down a bit, on Tuesday, a South Korean court sided with Youngpoong and MBK by blocking a proposal to change how votes for board directors would be tallied at the upcoming meeting. The voting system, if it had not been stopped by the court, would have made it difficult for the consortium to appoint their preferred slate of directors. The following day, on Wednesday, Korea Zinc erected a last-minute roadblock. It announced that Sun Metals Corporation, an Australian subsidiary, bought a 10% stake in Youngpoong from the Choi family and another subsidiary. Korea Zinc said the transaction created a so-called circular ownership structure because one of its subsidiaries owned more than 10% of Youngpoong, and Youngpoong owned more than 10% of Korea Zinc. Citing South Korean law, Korean Zinc claimed Youngpoong's voting rights were invalidated under that structure. Finally, in a statement on Wednesday, the Choi family and the Korea Zinc subsidiary said the sale of Youngpoong shares was, quote, the best course of action for the South Korean economy, end quote, as well as the right choice for Korea Zinc's long-term interests. Korea Zinc said the transaction had, quote, legal validity, end quote. Youngpoong and MBK said in a joint statement that the scheme was, quote, merely a stopgap and an illegal act to avoid losing in today's shareholder vote. We will pursue all necessary measures to nullify the illegal outcomes of the meeting and restore proper governance through lawful procedures, end quote, they said in the statement. A spokesman from MBK said earlier they would fight the cause in the courts. So, a big rivalry battle there in Korea for an incredibly important, one could argue, geopolitical asset. And finally, Barrick and Mali to start new negotiations on Tuesday. This is Reuters via mining.com. Just a quick update here. Mali's government and Barrick Gold will start a new round of negotiations on Tuesday to resolve a deepening dispute over the alleged non-payments of taxes by the Canadian miner and the seizure of its gold stocks by authorities in the country, two sources familiar with the matter told Reuters. So Barrick and Mali are returning to the table after Barrick shuts down the Loulo-Gounkoto complex. So interesting development there. We'll see what rabbit Mark Bristow can pull out of his hat. Coming up this episode, we have Jeff Killeen, PDAC's Director of Policy and Programs. And we're going to discuss the latest mining policy in Canada and how the mineral exploration tax credit expiring has impacted the mining industry, and just general views and perspective from one of PDAC's top people who puts on, of course, the main conference here in Toronto, one of the biggest mining conferences in the world. So that should be fascinating. Jeff Killeen, PDAC's Director of Policy and Programs, on this episode. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to the news. And turning to the website, world's #1 cobalt miner sees 2025 output approaching record. This is Bloomberg News via mining.com, and we've been discussing this the last few weeks. The world's biggest cobalt miner, which churned out a record amount of the battery metal last year, is targeting similar levels of production for 2025, following a ramp-up at two African mines. China's CMOC group gave output guidance at 100,000 to 120,000 tons of cobalt, according to a statement posted on its WeChat account after producing 114,165 tons in 2024. Elevated levels of cobalt output from CMOC could further pressure prices of the materials that's used in everything from electric vehicle batteries to aerospace alloys. The company exceeded its 2024 full-year production guidance within the first 9 months, sending shockwaves through the market and weighing on prices that are at the lowest since 2016. Now, we see in, say, Indonesia, where the government is starting to put quotas on how much nickel is produced in order to protect the price and it not go too low. We see it, say, in the past with Kazakhstan and uranium, where if you produce too much, you start to hurt the market. But here's a different story, because it's actually a Chinese miner that is doing the mining here. And the DRC, you would think they wouldn't want to flood the market. But that's exactly what's happening. And let's not forget this story, which I actually brought up from Reuters in May 24th, that we discussed, almost, 8 months ago. Exclusive. May 24th, 2024. China's state stockpiler aims to buy up to 15,000 tons of cobalt, sources say. And that's probably just for the year. And so 15,000 tons, and then you go back to our numbers here. So last year they produced 115,000 tons. So more than 10%. I mean, what is that? I mean, we're getting on close to 13, 14% of the cobalt produced out of CMOC is the amount that China's going to stockpile. That was last year. So it's pretty convenient, this situation for China. I don't know how the DRC might feel about it. Frankly, I think it's a talking point that the West could use should it decide that it has competitive refineries with China and say, like, are you happy about the market being flooded here? Because we see what happened in Indonesia and Kazakhstan when you flood the market. Is this what you want? And I'd be curious to hear what the DRC has to say about it. Do you want to keep flooding the market here? Let's continue. Elevated levels of cobalt output from CMOC could further pressure prices of the material that's used in everything from electric vehicle batteries to aerospace alloys. The company exceeded its 2024 full-year production guidance within the year's first 9 months. The speedy ramp-up at CMOC's two mines, TFM and KFM, in the Democratic Republic of Congo helped it double cobalt output last year. The company said it's carried out exploration work at TFM's western area and KFM Phase 2. Cobalt is often extracted as a byproduct from digging up copper, which CMOC is bullish about over the long term. It's targeting copper production this year at between 600 and 660,000 tons, compared with about 650,000 tons last year. So interesting there, and a bit of an analogous story over in Chile. This is Reuters via mining.com. Chile's mining agency expects another global lithium surplus this year. Production cutbacks by lithium companies in response to low prices for the metal have tightened supply forecasts, but a global surplus is still expected for 2024 and 2025, Chilean Copper Commissioner Cochilco said on Thursday. The global market was expected to post a surplus of 89,000 tons of lithium in 2024 and 141,000 tons in 2025, according to a report from Cochilco, Chile's government agency for mining studies. Chile is the world's second biggest producer of lithium, a key component for electric vehicle battery. And then turning over to Australia, we see a headline, Tianqi Lithium warns of 2024 loss, halts Australia expansion. This is Bloomberg News. Miner Tianqi Lithium warned investors it would post a net loss for 2024 and halt an expansion project in Australia to cope with languishing metal prices. The Chinese producer expects a preliminary net loss of about $1.1 billion for the period, Tianqi said in a statement late on Thursday. Explaining the drop, it said in a separate statement that poor prices and changes to construction plans had resulted in an impairment currently estimated at 2.2 billion won. The figure could increase as it's considered the impact of altered Australian plans. Lower income from its investments in Chilean lithium producer Sociedad Química y Mineral de Chile also contributed to the steeper loss. So battery metals continue to flood the market, and China seeming to be at the center of both of these issues. And of course, when you look at the processing of cobalt and lithium, again, these metals may come from other parts of the world, but China dominates the processing in pretty dramatic form. Yeah, China refines approximately 60 to 70% of the world's lithium, amazingly. And for cobalt, China accounts for approximately 77% of the world's refined cobalt production. So all just interesting data here. Let's continue. Canadian mining optimistic in face of Trump tariff threat. This is Colin McClelland at the Northern Miner. Canada is on edge, but the mining industry appears quietly confident it will emerge largely unscathed from U.S. President Donald Trump's threat to put 25% tariffs on all goods from its northern neighbor. More than half of Canada's mineral exports, valued at more than $80 billion, went to the U.S. in 2022. And just 2 years earlier, Trump in his first term set up the Joint Action Plan on Critical Minerals Collaboration. But Trump seemed ready to tear everything up with comments this week. Quote, "We have a tremendous trade deficit with Canada." End quote, the president said. Quote, "We don't need them to make our cars, and they make a lot of them. We don't need their lumber because we have our own forests, etc., etc. We don't need their oil and gas. We have more than anybody." End quote. As most Canadian industry leaders have pointed out, the U.S. depends on Canada for a host of minerals and supplies. It gets germanium, aluminum, and nickel far easier than from China, whose stranglehold on critical minerals Washington is trying to loosen. And here's a quote from Pierre Graton, president and CEO of the Mining Association of Canada, who said in a phone interview, quote, "We produce a certain refined product of nickel that is suited for U.S. industries. When China imposed a ban on the export of germanium to the United States, we could supply them with germanium, and this underpinned how important our trade relationship is to one another." End quote. Graton said it's difficult to believe that Trump will actually follow through on the tariff threat against a major supplier to the American economy, but equally as difficult to determine Trump's final decision. Quote, "It sure sounds like what he wants to do, just put a shock to the system and make Canada buckle. And that's very scary for all North America." End quote, Graton said. Quote, "But will he in the end get advice that cautions him against this kind of approach? And will Canada be able to negotiate its way out of this? I don't know. I don't know because the story changes daily." End quote. And Colin also quoted Pierre Lassonde, founder of Franco-Nevada and former president of Newmont, who said, Trump is unlikely to impose tariffs. Quote, "All mine output is raw material for the U.S. industrial complex." End quote, Lassonde told the Northern Miner by email. Quote, "The higher costs associated with any tariffs automatically go to the consumers as all commodities are traded worldwide for the same price. As well, if the USA wants our critical metals, why would they put a tariff to get them? My sense is that Trump will mostly refrain from tariffs on all raw materials, including carbon products, that is, oil and gas," end quote. So things are coming to a head between US and Canada. I believe February 1st is the new deadline for imposing of the tariffs by the United States. Another related story, Canada-Mexico steelmakers refuse new U.S. orders. This is Bloomberg News via mining.com. Some steelmakers in Canada and Mexico are telling customers that they are refusing new orders to the U.S. on concerns that President Donald Trump soon will reimpose duties. Canada's Stelco has been telling U.S.-based consumers it is pausing sales quotes, according to a person familiar with the matter. Mexico-based steel suppliers also stopped taking orders for materials this week as they await potential action from Trump, according to Flack Global Metals, a large buyer. So a lot of uncertainty out here. Another headline, Saudi Arabia weighs global mining deals as sector consolidates. This is Bloomberg News via mining.com. And of course, they just had the Future Minerals Forum in Riyadh. And so we saw a flurry of headlines last week of Saudi Arabia really trying to become a major player in metals. And again, this is Bloomberg News via mining.com. Saudi Arabia is looking for mining deals in a push to secure supplies of critical minerals for its industrialization plan, just as a wave of attempted consolidation sweeps the sector. Joining the consolidation drive, quote, could be a good way of entering the market or getting at least access to different assets in a more structured way, end quote, Saudi Arabia's Minister of Industry and Mineral Resources, Bandar Al-Khorayef, said in an interview at the World Economic Forum in Davos. He didn't elaborate whether this would be buying stakes in assets or buying companies outright. So just more confirmation here that Saudi Arabia is getting pretty serious about its metals investments. Continuing on, Cameco resumes uranium production at Inkai joint venture in Kazakhstan. This is by a staff writer at mining.com. Cameco's Inkai joint venture project in Kazakhstan has resumed uranium production, Kazakhstan's national uranium producer Kazatomprom announced on Monday. Inkai temporarily suspended production activities at block number 1 of the Inkai deposit on January 1st due to the absence of required approvals from state authorities. The delay was caused by the late submission of the necessary documentation. The In Situ Recovery joint venture, in which Cameco holds a 40% stake and state-owned Kazatomprom holds 60%, is the largest uranium operation in the Central Asian country. So, interesting. Kazatomprom said, quote, Kazatomprom remains fully committed to fulfilling contractual obligations to all existing customers and maintains sufficient inventory levels to comfortably manage deliveries throughout 2025, end quote. So that was an interesting story which just seems to have disappeared as quickly as it arrived. Continuing on, MP Materials produces rare earth metal in Texas. This by staff at the Northern Miner. MP Materials has kicked off commercial production of neodymium praseodymium metal at its Independence facility in Texas, along with a trial production of neodymium iron boron magnets, the company announced Wednesday. The facility in Fort Worth will use feedstock from the company's Mountain Pass rare earth mine in California to build the first fully integrated rare earth metal alloy and magnet manufacturing facility in the United States. And we have a quote from James Litinsky, MP Materials founder, chairman, and CEO, who said in a statement, quote, this milestone marks a major step forward in restoring a fully integrated rare earth magnet supply chain in the United States, end quote. Also, another headline, gold price surge drives narcos into illegal mining in the Amazon. This is Bloomberg News via mining.com. So this sounds like a tragedy. Here is a quote from Andre Luis Pareca Ferreira Cunha, a federal prosecutor assigned to illegal mining investigations across the Amazon. Quote, the criminal organizations that have been dedicated to drug trafficking for a long time have discovered a new market. They're creating parallel states in the middle of the Amazon. It's terrifying. This sounds like an incredibly tragic situation, and we will continue to follow it here. And finally, this is Reuters via mining.com. Fortescue Energy CEO says green hydrogen cost is key as demand drops. So green hydrogen not really delivering on what people were hoping. Another headline, Carbonscape signs supply deal for biographite production in US and Europe. This is by a staff writer at mining.com. So biographite coming out of a company called Carbonscape in New Zealand. And finally, Sandvik, a major supplier of mining equipment, signals stabilizing orders as Q4 intake beats estimates. That's Reuters via mining.com. Those are your news stories. Now, let's take a look at metal prices. Turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.57%, almost even with last week, up 0.01%. The UK 10-year gilt yielding 4.6%, a similar story, up 0.01% from last week. Italy's 10-year bond is yielding 3.65%, that is 0.06% higher than last week. Starting to approach 4% for Italy, which might start to spell problems for Italy, but hard to say. The German 10-year Bund is yielding 2.55%, and that is up 0.07% from last week. And the Japanese 10-year bond is at 1.2%, that is up 0.01% from last week. So 10-year bond yields edge slightly higher on the week. Turning to precious metals, gold is trading at $2,746.40 per ounce. As far as our weekly indicator here, that is almost the highest. Our highest was 2,763 that we've recorded here, and we're at 2,746. So we're approaching record territory again in gold, and I believe it hit a record in the last few days. Silver is trading at $30.46 per ounce. That is $1.02 lower than last week. Platinum is trading at $946.70 per ounce. That is 20 cents lower than last week, so basically even on the week. And palladium is trading at $954 even per ounce. That is $17 higher than last week. Turning to industrial metals, copper is trading at $4.20 per pound. That is 9 cents lower than last week. Iron ore is trading at $101.34 per metric ton. That is up 23 cents from last week, so basically even on the week. Aluminum is slightly lower at $1.19 per pound. That is 3 cents lower than last week. Lead is also lower at 88 cents per pound. That is 2 cents lower than last week. Nickel is at $7.07 per pound. That is 22 cents lower than last week, and again threatening the $7 level. Tin is trading at $13.68 per pound. That is 17 cents higher than last week, and one wonders if that situation in the eastern DRC is pushing tin prices higher. Cobalt is unchanged at $11.02 per pound. Lithium is slightly higher at $10.74 per kilogram. That is 9 cents higher than last week. Uranium is trading at $71.80 per pound. That is $2 lower than last week. And zinc is also lower at $1.28 per pound. That is 6 cents lower than last week. So a bit of a mixed bag on the metals, with really gold, palladium, and tin being the standout performers, with industrial metals taking a little bit of a break, with copper down, nickel down, zinc down, aluminum down. And those are your metal prices. Coming up this episode, I'm happy to welcome Jeff Killeen, PDAC's Director of Policy and Programs, for the first time in the Northern Miner podcast. We're going to learn all about what Jeff is thinking in terms of public policy of mining in Canada and around the world, as well as what PDAC has planned for this year's conference, which of course is a mega mining conference globally that takes place in Toronto, Canada, in just a few weeks. So we're going to learn all about that with Jeff Killeen, again, PDAC's Director of Policy and Programs. Hope you enjoy the conversation, and I will see you on the other side. Joining me today, I'm very pleased to welcome for the first time the Northern Miner podcast, Jeff Killeen, PDAC's Director of Policy and Programs. Jeff, welcome to the show.
Thanks very much, Adrian. Really appreciate you having me on.
Well, I've been an attendee of PDAC, I guess from 2012 all the way up to, I guess it was the spring of 2020 when COVID hit. That was the first year I didn't go, and I'm based out here in Europe, so it just became a habit after that. But I mean, I went for a good, 9 years there. So it's awesome to have you on. And it's extra exciting to have the Director of Policy and Programs, because, of course, policy is such a huge issue, government policy in the mining industry right now. So again, just thrilled to have you. So as we start out here, tell us, what do you have in store for us for this year's PDAC?
Well, right to that point, Adrian, we are at that same place in the calendar each and every year. And that's a big part of what we bring as consistency to our members and to the industry. We always start on that first Sunday in March. We run for 3.5 days through Wednesday. And so that's where we are this year, March 2nd to 5th. It'll be our 93rd iteration this time around. So we're well oiled and well heeled in terms of being able to bring this show to our industry and to our members. There's going to be a lot in store, as you might expect. Last year, we had a great turnout. I think we had very close to 27,000 people through our doors over those 3.5 days, 4 days if you include some of the short courses that we do host on the Saturday beforehand. And we would expect a pretty similar turnout this year based on all the numbers we're looking at today. So we are expecting over 1,100 or somewhere in and about 1,100 exhibitors. That'll be split between our trade show, our investors exchange, and then around that, there's a whole ecosystem of places for folks to have professional development, education, interaction, networking. So we've got our technical program. We have a number of policy programs, as you kind of hinted at, with our sustainability, indigenous affairs, and capital markets programming. As I mentioned, we do have short courses. We have keynotes. We have a bunch of networking events that are littered throughout those 3.5, 4 days. So we're really looking forward to this year and expect it'll be a really big benefit to those that come in through the door. You'll be able to see folks from, if we expect a similar turnout to last year, over 100 countries. So you'll have folks from virtually every continent come. Most of the major mining centers, or all of the major mining centers you find around the world, and a lot of the hot topics around mineral exploration, mining development, processing, they're all really in store for us in that first week in March.
Well, it really is an institution in Canadian mining, and you could actually argue, I think, global mining, the PDAC conference. And to your point, like about attendance, like I was just in Vancouver at Roundup and at the Vancouver Resource Investment Conference. They were well attended. Like it seems like there's a lot of enthusiasm for mining. And I guess we shouldn't be surprised with all of the news we see. But are you getting that sense of an unusual, shall we say, amount of enthusiasm for this humble industry?
I'd position it maybe more, Adrian, as a reinvigoration. If we look back 10, 12, 13 years ago, we got turnouts like this for the PDAC convention, north of 25,000, north of 30,000 in some cases. And we do often see ebbs and flows with our attendance based on what the commodity price environment looks like. But I think you do hit a good point here that there has been a shift in the last 4 to 5 years, particularly, as we'll get into on the policy side of things, as governments around the world, I would argue, wake up and realize how integral minerals are to supply chains, everyday life. And I think that's where my perspective comes from, is minerals are really inherently a part of everything that every other industry does. There's been a lot more focus in the last few years on electric vehicles in the automotive sector. Certainly that's a big source or a big end user of minerals in the supply chains, but just general manufacturing, transportation in general, all the things that we build and drive on each and every day, they inherently require minerals to put them together. So the raw materials that come from our industry are, an essential piece of everything that we use, whether it's your cotton shirt that you might be wearing, it's built in a factory, it's put on a boat, it's put on a train, it goes to a truck, on the reverse on the other side, and all of those things are a result of what gets brought out of the ground. So mineral exploration, mineral extraction, they're a key piece to everything that we do each and every day.
Indeed, like key to the supply chain, which we hear so much about. And so I guess just before we get more into the policy, if people are interested in going, where should they go online for tickets, or how does it work? Like, how should people proceed if they are interested in attending?
I'm glad you asked. And quite simply, you can go to our website, pdac.ca. There's a whole suite of information there on what's in store for the convention. There's a really great platform to show you what the calendar looks like, what's scheduled every day. If you want to register, you can register right there. There are a whole suite of different types of registrations to try and tailor fit to folks in terms of their budget, in terms of their wants. You can come in the door for as little as $25 a day, Adrian, and I would argue that's completely unmatched in industry in terms of conventions or conferences. The affordability for folks to be able to come in and experience the PDAC is unequaled. And as you kind of pointed out a few minutes ago, the size and scale of what we have on offer relative to that price, it's really the best bang for buck when you want to consider learning, networking, and having connection points in the industry.
Can totally speak to that. And, everybody shows up. It's awesome. So in terms of policy then, and I guess, does the conference have a theme this year that it is highlighting?
We're pretty careful in not trying to construct a theme specifically, Adrian, just because I think we have virtually every topic on offer. And so the themes sort of come to the surface based on what you see in the programming. That's a reflection of what folks are talking about in industry or what's of most interest to people around the industry. But there's not a specific theme that we try and drive each and every year because naturally the interest of our members really shine through in that programming. But if you look at what we have on offer, if we look at some of the policy programs, as you kind of hinted at, in capital markets program, we'll talk a lot about what has happened in the last few years in the equity marketplace, how there's really a strain in terms of companies being able to access capital, particularly as you move down chain in terms of the size and scale of companies. You'll see in our sustainability program, there'll be lots of content on community relations and disclosure of best practice. In the Indigenous Affairs program, there'll be a number of sessions that talk about Indigenous relations between companies and communities, making those first steps and trying to build cohesive relationships. We've obviously seen some of these themes start to intertwine over the last number of years. We're very proud to have pivoted in that sense. We do see more integrated sessions, as we call them, where it may not be a specifically capital markets theme. There's a crossover with capital markets and sustainability or Indigenous affairs and sustainability. And this year, I think for the first time, we have a session where it's integrating three different themes together. So obviously, that phrase critical minerals has boiled up more and more in the last 5 years. I think our position, or the phrase I often use, is minerals are critical, as I hinted at before. So that will be a key theme throughout most of what you see on the stage or around the convention. And as I say, those hallmarks of capital access, sustainability, responsible mineral exploration and extraction, and cohesive community and relationship development between stakeholders are a lot of the things you'll see on offer.
You mentioned equity markets. Just on that, how is Canada doing? I mean, we've had a lot of kind of political volatility, I guess you could say, in the last couple of months. There was a lot of controversy over the mineral exploration tax credit and flow through shares, alternative minimum tax. What is your sense of the, landscape as far as, mining in Canada and, access to capital and just a favorable investment landscape? How do you see things?
Well, it's a really dynamic sector, as you probably know, Adrian, and most of the listeners for the Northern Miner would know. A story I've been telling to folks as we're meeting with politicians or decision makers around Canada and elsewhere is it's a bit of a story. It's a nonfiction story, though, and I would position it as the good, the bad, and the ugly, if you will. We look at it from the good perspective. We did see a bump up last year, 2024, in terms of how much money was invested through the equity markets into mineral exploration and mining specifically. So it was up a few $billion year over year from 2023, and that's the good. But when you strip away how did that money get raised, where did that money go, there's a bit of an underlying story that isn't so good, or that's when we transition really to the bad part of it. As in, when you look at, I think there was about $10 billion raised on the TSX, the venture, and the Canadian Securities Exchange combined. About 80% of all of that equity that went into those marketplaces went to just the top 50 deals. And even if you look at the top 3 or 4 deals, those represented almost 3 billion out of that total of 10. So it really gives you a sense that there is fewer and fewer dollars that are either trickling down or penetrating into those smaller capital market cap companies or those companies that are at earlier and earlier stages. This is also reflected in, if you break out the difference between the TSX and the venture exchange, the amount of money equity investment that's come from the venture exchange proportionally has declined now for, I think, 3 years running. So as much as there's a good side of the story, equity markets up year over year for mining and exploration specifically, how that money is flowing and penetrating down into the smaller end of the market is really limited. Then if you take an even bigger step back and you look at how much money, how much equity was invested in the Canadian marketplace overall. So not just our sector, not just mineral exploration and mining, but including everything, financial services, pharmaceuticals, consumer products, all of those different companies that are listed, it's in a pretty dire state. You might even say that the capital marketplace in Canada is collapsing. We've seen the amount of money coming into the exchanges the last 4 years dropping. And in 2024, as much as, again, thinking about the good side of things, mineral exploration mining took half of everything that was raised. As in, I quoted that $10 billion number. Well, there was only a total of about $20 billion raised total last year in the Canadian marketplace. So let's reflect a little bit. Let's look back to post-financial crisis, 2009. There was over $60 billion raised. If we look at the pandemic year, 2019 or 2020, we were looking at 30 to 40 plus billion dollars raised. So last year, as far as my view can look backwards, in the last 15 or maybe ever, it was the weakest year we've ever seen in the Canadian marketplace for new equity investment. Other signals suggest as well that from the private equity markets, we're seeing a similar trend. So there's a real concern that we have here sitting at PDAC, and I think many others around the financial ecosystem in Canada are concerned that Canada's marketplace is really shrinking. As much as our sector has dominated in terms of proportion the last few years, again, that lack of penetration downstream is a concern. And how long can that even be sustained if we're seeing such an overall decline in market interest here in Canada? That's something that we're acutely aware of and very concerned about.
Now, do you think that's a result of recent policy of, say, this alternative minimum tax or the expiration of mineral exploration tax credit and like this issue with the flow through shares? Like, do you think it's a result of that, or that's just pouring gasoline onto already a bad situation, so to speak, a fire?
Probably a mix of both, Adrian. And that phrase that's often used, death by a thousand cuts, that's the kind of scenario I think is playing out here in Canada. Thank you very much for mentioning those few pieces. The mineral exploration tax credit, not to go into super detail, but it's a piece that allows companies to raise capital in very risky terrain. Mineral exploration is not an easy business. The prospect for success is often very low. And so ushering in that risk capital into the sector often takes a bit more incentivization than you would find elsewhere. So the METC, the mineral exploration tax credit, is a critical part of our fiscal landscape here in Canada. It's the reason why, in many cases, the Canadian marketplace has raised more money for mineral exploration than any other market in the world. Why you see more than half of the mineral exploration and mining companies globally listed here in Canada. It's because of those keys that really make it more attractive to invest here. So yes, as you see things like the risk of the mineral exploration tax credit expiring, that takes away some of the incentive to bring capital towards Canadian explorers. You see things like proposed raise in capital gains. That makes it even more challenging to see, the prospect of a positive investment, reaping the rewards from that. That's another impediment. You also see the prospect for alternative minimum tax being raised. That has an inherent link to or a headwind towards folks that are looking to invest through flow through shares and the mineral exploration tax credit. So you layer these things on top of one another, and it really just adds to that potentially weakening marketplace we see in Canada overall. And it creates a real risk that we're turning what has been a fruitful grape into more of a raisin here with potential future investment into our sector.
Well, I may have a headline for our podcast here, a grape turning into a raisin. Okay, and PDAC has recommendations, don't they? There may be people, policymakers listening to this who may not realize that PDAC actually has recommendations. Is that correct? You're the director of policy. Do you offer them certain avenues of proceeding that you think would be beneficial from a policy perspective?
We certainly do. So no question, most of the folks, when they think of the PDAC, they think of the convention, and that's great. So we're very happy about that. That's a big part of what we do. That's one of the main reasons we exist, is to create that environment, to convene the industry and make those connections happen, because that's what makes industry work fluidly. That's what makes new discoveries happen. That's what brings capital into the sector. But a big part of what I do is leading a small team of staff that we look at evidence. We look at what's happening on the ground. We use our members through strategic committees to give us information so that we can make evidence-based research and decisions, and then we can provide recommendations primarily to our federal government. So that's primarily what I do. We think about the pace of equity investment in the marketplace. We look at the rate of discoveries of mineral resources, how those resources are being converted to reserves, and what is ending up coming out of the production end of things down the line, to try and understand where are the pressure points, where are the pinch points, where are the impediments for our industry to be successful. And then based on that evidence, we try and formulate logical recommendations to say, here's what needs to change to make things better. So if I can step back a little bit, talked a little bit about that evidence. We talked about the shrinking potential, the lack of capital coming into the marketplace. Now, how is that translated into activity? Well, there's been a fairly strong, fast pace of mineral exploration over the last 4 or 5 years in Canada, as in there's about $3 to $4 billion a year being spent, which is a good marker. But we do know that there's a lag period between how much money is raised and how much is spent. So as we see less and less money raised in the last few years, there's certainly a hint that we will see activity in Canada start to decline as a result of that. So how do we stave that off? We can also look, as I mentioned, at production. It's not a difficult suite of math to do to look at, say, where the copper price has gone in the last 5 to 10 years, and then look at copper production. And they're going in opposite directions. I mean, every day, obviously, there's noise and ups and downs in commodity prices. But generally, if you look back 10 years ago, the copper price is higher today. But if you look back in terms of production, copper production is down about 30% over that time in Canada. If you look at nickel, very similar numbers. Now, nickel price maybe not as robust today as it has been, but production is down nearly 30% in 7 or 8 years. Zinc, very similar. So you think about that reduction in capital investment, the potential for a drop-off in mineral exploration activity. You see production levels of key base metals declining, or critical minerals as they can be also seen. And then you have to think about, well, how do we turn this tide? So part of our recommendation suite is really simple, and we've covered some of that. It's renewing the mineral exploration tax credit, but not just renewing it for a year. We fortunately did see it renewed in 2024, but only for 12 months. And that was after a lot of really hard work and a lot of meetings and trying to relay the importance of this credit. But it's about to expire at the end of March. It's about to expire at a time when we don't have government sitting in Ottawa. And so the actual mechanism to renew it or extend it is really limited or almost absent at this point in time. So we're getting to a real, not a panic situation, but we're getting to a place where we're very concerned. How is that credit going to exist beyond April 1st? So we're calling for a permanent installation of the METC. That's the only logical way forward in our minds, especially as we talk from a broader perspective on what the federal government is looking to do from its critical mineral strategy. That's one of the sheer ways to try and bring more capital into mineral exploration and ensure that there is a lot of activity and new discoveries being made in Canada. We also look at resources. So that very first estimate of what's in the ground, resources are growing in some cases, or in many cases for copper, for nickel, for zinc, for gold. But in many cases, those resources aren't being converted or upgraded into the more well understood reserves, the reserves that you can actually draw a mine plan around and to make a decision of, do we move forward and start to extract this material? So how are we going to see those resources turn into reserves? Well, one thing we want to see done with the flow-through share regime in particular is removing the gap. What do I mean by that? Currently, a company can raise capital through flow-through share by issuing flow-through shares, and there's a very strict prescript of how they're to spend that money. It has to be done on a certain suite of activities. But one of those activities, or a few of those activities that aren't included, is some of the scoping work, some of the assessment work to actually convert resources into reserves and allow a company to go forward towards a build decision to say, this is good enough and we can build this mine and make it a viable machine. So we want to see that gap removed. We want to see the eligibility expand for flow-through shares so that companies don't reach that endpoint where they can't spend flow-through shares on assessment work. They're struggling to raise the quote unquote hard dollars in the marketplace. And so they end up at a standstill. So that's a major piece we'd like to see happen. We also, within the flow-through shares, see there's some impediments for a broader suite of investors, as in over the last number of years, we've seen more and more investors in the flow-through share marketplace are of the high or very high net worth population in Canada. So we think that there's potential to broaden out that investor base, particularly as there's a lot of folks that work in and around the industry and have a good understanding of how it works. Right now, if you buy a flow-through share, if you go to sell that share at any point in time, your capital gains are based on a nil cost or zero cost, as in you paid $0 for the share. So inherently, you have to pay capital gains no matter what the share price is. We want to see that changed to have capital gains assessed at the issue price or at the purchase price. So if you buy a share for $1 and you sell it at 80 cents, you're not going to pay capital gains on that loss. If you end up in positive territory, well, then you'll pay capital gains accordingly. But that change in and of itself could usher in a lot of new investors, potentially folks that are still viable investors, but not necessarily just the ultra high net worth or the very, very wealthy folks in Canada. So broadening out of that investor base means more potential investors, means more potential investment, quite simply. Then you mentioned the alternative minimum tax earlier on. We had recommended some changes to AMT based on what was proposed last summer by the federal government, that AMT would be going higher. Fortunately, our recommendations were heard by the government at that point in time. There was amendments proposed that would basically allow some adjustments for folks who are buying flow-through shares so they wouldn't be as heavily impacted by this change in alternative minimum tax. But that change died along with Parliament in the fall. And so, it's in limbo at this point in time. But I think taking a broader view, what we really would want to see is this proposed increase to the capital gains inclusion rate abandoned. As we talked about earlier, as I mentioned earlier, the significant decline we're seeing in overall investment in Canada, not just in mineral exploration and mining, just in the Canadian equity marketplace, is a real concerning litmus test. And the proposition of raising capital gains taxes on those very folks that are investing in the Canadian marketplace at a time when we're seeing this decline is something that just seems counter to trying to reinvigorate investment. So we really think that this proposed increase to capital gains should be abandoned. Then there's less pressure to necessarily make changes to alternative minimum tax because that would have a much greater impact. And that's something that we've been messaging over the last number of months. You may have seen, or our members may have seen, when Parliament was prorogued earlier in January, we did put out a statement that very day listing a number of these things, saying these are priorities for us. These are priorities for the mineral exploration, development, and mining industry. And hopefully those recommendations are being heard. There's a lot of other things that we talk about outside of those, particular fiscal changes that could be a real benefit for Canadian explorers, for miners in Canada. I think we join a lot of other folks who have called for, we need to look at the amount of investment that pension plans and that domestic pension plans actually have in Canada. There's a very small percentage in terms of assets under management for many of those larger pension plans actually invested in Canada. Now, we appreciate trying to have performance that's in line with other opportunities in terms of investment funds is certainly front and center for many pension funds or pension plans. But we also see how performance isn't the only measure. If you think of the Canadian pension plan in particular, what is the value of investing more funds domestically here in Canada that generates more jobs, more economic growth, and more prosperity? Equals more payers into the pension itself. There are other ways to potentially look at how these pensions perform and what benefits they bring back to us as Canadians. And as much as we're cognizant that large funds may not be investing directly in small exploration companies, but the trickle down effect of pensions investing in things like infrastructure, energy, and transportation, it provides more optionality for our industry. It certainly could potentially lower costs for just their own development and capital investment. So these things are key changes that we really want to see happen.
Indeed, there's something to be said for investing in the country and just, in a sense, investing, as you kind of point out, kind of has more than one kind of meaning here. It's not just simply about making money. In a sense, it's also about just investing into, the future of the country, so to speak. So, okay, very interesting. And just a quick question. You mentioned that copper, nickel, and zinc production were declining. I mean, and you meant in Canada, right?
Correct. Yeah, that's exactly right.
So, I mean, the disconnect here, because, we hear all of this talk about critical minerals and the supply chain and really reshoring, so to speak, the supply chain. But meanwhile, investment is, as you say, on the verge of quote unquote collapse, or however you want to put it, is dramatically down. Production is down. What's the disconnect here? You hear from explorers, they have no money, right? So what's the disconnect, do you think?
Well, those are the right questions to ask. I think, I always like to take a step back because there is a positive underlying piece here. As a geologist myself, looking at Canada, and we've said this many times, but it begs repeating, nothing changes the fact that we're the second largest country on Earth. Nothing changes the fact that we've got almost every viable geological type or mineral terrain here in Canada that can host copper, zinc, nickel, rare earths, graphite, gold, platinum, palladium, all of those things. We have all of that potential, and we're very fortunate to have that. So nothing changes that. Nothing changes the fact that we've got almost a century of more than a century really of mining experience in developing an ecosystem around mineral exploration and mining with respect to services and trade skills, the financial ecosystem that's evolved over this last, 70, 80, 100 years to understand how mineral exploration and mining works, being able to make those connection points to domestic and global investors. Those things don't change. So from an underlying perspective, we're in a great position. And I think that's where you hear a lot of this talk, whether it's at the political level or in just the social lexicon of why Canada is great and why we have so much to offer in terms of our Canadian supply chains, those of our allied partners and beyond. So if you look at what's happened over the last 10 or 15 years, we haven't seen new smelters being built as a, for instance, or processing capacity being built in Canada. We've only seen a handful of mines built largely in the precious metals sector. If we look back the last 20 years, there's really only been 4 or 5 mines built in the quote unquote critical mineral sphere. And so there's a whole host of reasons why we do see ever increasing controls around disclosure of practices. We do see the best practices bar continue to rise. Those things have down chain implications in terms of permitting timelines and social acceptance. So that's where PDAC steps in. That's a big part of why the conference exists, is to try and relay how important this industry is. And I think that's a big part of what we want to do over the next number of years, is connect back with the average Canadian to help them understand how critical mining is to everything that they do in every day, and why we should be doing it here in Canada, because we do it more responsibly, we do it more sustainably. And so with that greater, hopefully, growth and social acceptance, we can see some of this tide turning. We can see new mines being built more expressly, and we can see some of these production numbers reverse course.
Excellent. And you anticipated my last question there, mentioning the refineries and the smelters. But I would like to very briefly, in our final question here, go back to that. Like, how is the country doing? Like, are there plans for new refineries and smelters? Like, put it this way, and I mean, you're much more better positioned than I am to understand the reality of this. Of course, Democratic Republic of Congo, to use the example of cobalt, makes like 70% of the cobalt, and then China really controls the market, though, because they control the refining, right? And they have like, I don't know, is it 80% of the market, whatever it is, right? So to me, when you start looking at the fact that China dominates almost all of the metals in processing the materials, to me, this seems to be the actual choke point. I would argue more than the mines themselves, I dare say. I'm curious, what do you see? Like, do you see much action on the refineries and smelters versus actually taking the ore out of the ground? Do you think these issues get confused too much? What is your take, of refining and smelting, say in Canada, maybe North America, as we wrap up?
I think you're right in saying it is a major choke point or a potential pinch point for the industry. Thinking of the Canadian landscape, we want to be as much as possible price makers and not just price takers in terms of producing raw materials, taking metals and minerals out of the ground. We want to be able to have value added steps for those products as they move through the supply chain. And to that specific question, what does the processing capacity look like in Canada? It's not growing, not in any material sense. Now, there certainly are, and we're very hopeful for those junior exploration developers that are at the precipice, that maybe have feasibility studies out there, that are hoping to be able to develop their own production and processing capacity. So there are certainly schemes and ideas that exist. But in terms of what wrenches or shovels are at work today to grow that processing capacity, it's not necessarily happening. So we do really have limited regions and points within Canada where you do see copper being produced into, more refined products. And that's not necessarily going to change in the next 2 or 4 or 5 years. So that's a big part of where we need to focus, is, again, developing that social knowledge, that social acceptance of why we need to do these things, making sure that Canadians understand doing them here in Canada is beneficial for many reasons, not just economic, but from a social perspective. And as that production capacity or processing capacity grows, I think you're right. You will see more and more mineral deposits come into economic feasibility, you can see production growth. So that's a big part of what we need to see happen over the next decade.
Jeff Killeen, PDAC's Director of Policy and Programs, thank you for joining us and sharing all of your insight here on this week's Northern Miner podcast.
Thank you very much, Adrian. Appreciate the time.
Thank you to Jeff Killeen for appearing on this week's podcast for a fascinating discussion. And thank you, dear listener, for tuning in and supporting this program. Again, it was wonderful to see everybody who listened to the podcast in Vancouver there. Well, I was there for the Vancouver Resource Investment Conference and AME Roundup. That was wonderful. So again, big shout out to everybody listening. It is deeply appreciated. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.